Joining me today is Dr. Gary Dayton of TradingPsychologyEdge.com. We'll be talking a little bit about his approach to the markets and the coaching services that he offers. Dr. Dayton, thanks for joining us.
Oh, Simit, thank you for having me. It's a pleasure to be here today.
The first question I like to ask everyone, all the traders that take the time to join us, is sort of how did you get started with trading and where you are today?
I started back in 1998 or 99. I had gotten, believe it or not, a brochure from Ken Roberts. You familiar with him?
No, I'm not.
He was probably more of a marketing guy than he was a trader, but I had gotten it was a small book, in fact, in the mail, a booklet on trading, and I read it through and I thought, boy, that's pretty intriguing. I remember setting it aside for, I don't know, maybe a month or so on my nightstand, and every so often I would look at it. And this was at the time that I was finishing my doctorate in clinical psychology over at Rutgers University here in the States. And as I was finishing that up, I had some time over the summer, so I ordered his whatever it was that he was selling at the time. And I remember getting it, and it was a book with a bunch of charts and some instructions on how to trade those, how to read those charts and how to trade them. I remember sitting up or staying up all night long, reading it through and then reading it through again because I just couldn't believe what I was reading. You know, you buy down here at the low and you sell out at the high and you make a ton of money. And there were, average everyday people at the time, frankly, to be kind of candid, I thought even less intelligent than I was, who were doing well. I think there was a little videotape that went along with it. Just average people who I thought, boy, if they could do it, I sure could do it too. So that's how I started, and I signed up for his stuff and started to trade and proceeded to lose a lot of money
Right.
and was very unsuccessful. And I thought, boy, there has to be more to this than what I'm getting here. Maybe I'm just not understanding. So I asked my broker. At the time we were doing this, it wasn't all electronic. The electronic markets were just starting. Globex was just starting at that point, and most of the trades that we would be taking, like I was trading commodities at the time, cocoa and cotton and gold and oil, crude oil, those kinds of markets. You had to call up the broker and place a phone order. So I got to know my broker, and I asked my broker, how do I get better at this? That was, you could just tell how novice I was, right?
Mm-hmm.
And he said, oh, well, Elliott wave and Fibonacci and all of these things. So make a long story short, and I'm good at making long stories, by the way, so feel free to cut in at any point. Um, to make a long story short, I hired somebody to teach me Elliott wave who was either at the time or just prior to that had worked with Bob Prechter at Elliott Wave International and was one of his analysts. I couldn't make that work. I tried candlesticks. I couldn't make that work. I read everything. I have a library of, quite a number of volumes on technical analysis. I did radar signal to noise ratio type indicators, Holbert transforms, all these fancy things that I couldn't make work. I did Fibonacci in fairly sophisticated ways. I couldn't make that work. Finally, I went into Linda Ratchke's chat room for a while, and I wound up meeting her down in New York at the Traders Expo one year. And I introduced myself and I talked to her a little bit. And she said to me, you really have to know, you really want to know what's going on in the markets and why they're moving. And what I would recommend is that you take a look at the Wyckoff material. And she told me that it was still available from the Stock Market Institute out in Phoenix. And So I did, and I spent a year or so with that, and I really, that's what started to turn my trading around, was just looking at price bars, the high, low, and close, along with volume, and beginning to understand how the moves of the market start to reflect themselves in the charts, in the price bar and volume itself. And along the way, I was lucky, very fortunate to meet David Weiss, who is an expert in the Wyckoff method, and I spent several years with him. In fact, I was his student and still am his student, and proud to say that, because he's a wonderful fellow. He lives not too far from me in Boston. I go up and see him every so often, and we once in a while we do some seminars or webinars together. It's always a real pleasure because he really is my mentor. If it weren't for him, I probably still would be struggling with trying to figure out how this worked. And of course, along the way, I've also added my own stuff to this as well, my own understandings of the market. But basically, it was that long story of persistence and multiple years of struggling at this, trying everything, and finally coming down to the point where the simple naked chart of price bars in action. We also look at wave charts. I can show you that. But just reading the market by its own action and trying to figure out what's the likely next move in this market, and then trading it accordingly. And I certainly don't have a 100% win-loss ratio. I'm a day trader primarily, and it runs in the high 70s to low 80s. But I have losses. I make mistakes. I do bonehead things, more often than I care to admit. But that's part of being a human being, and it's part of the trading game.
Sure, absolutely. So you embarked on this path. You mentioned like around 1998 was when you first started entering the world of trading. How long was it did you spend sort of in the dark until you found the Wyckoff method? And even once you found the Wyckoff method as sort of the turning point, how long did it take from when you started reviewing and studying that material until you got to the point where your win rate is 75, 80% and you're consistently profitable?
Yeah, it took a while. I probably was in the dark for about 3 or 4 years trying different things, and consistently losing money in doing that. I probably spent about a year in Ratchke's chat room, maybe a little less than that, and then a year reading through and studying the Wyckoff method. Um, so probably it took me about 5 years before I got to the point where I was break even, where I stopped the hemorrhaging of losing money, and then probably another year or two before I started to get profitable on a consistent basis.
So it sounds like by around 2004, maybe you're getting to that point where you're a trader. It's working for you. Um,
Yeah, that's right. 2004, 2005, I think I started to produce my first good profits.
so
Yeah.
that's like we're going on 9 years now, basically. Are you trading? You mentioned you're a day trader? Are you trading for a living? Are you really dedicated every day? Basically, this is what you're doing, or?
Yep, yep. Essentially this, yeah. That's all. I'm writing a book now for John Wiley and Sons on trading psychology. So I'm not trading as much as I would like to. But yeah, that's my game. That's my business.
Okay, so can you share a little insight into your daily approach? Meaning, is your method as a day trader, is it like a set and forget where you can even analyze the markets at night after close, identify where you want to enter and some potential exit points? Or is this something that you're actively watching? Are there specific time frames you're focused on, or sort of what's the routine that you've got going?
Well, I trade primarily the S&P E-minis, the index futures, and that's a market. I trade that because it's the most liquid market out there. It's almost every day. It's very active. There'll be a couple of days a month maybe where we get those narrow range days where it just kind of quiets down and there's not a lot of swing movement in the market. But we've had some nice good moves, especially recently, the last couple of weeks. 10, 12, 15-point moves in the markets on a day trade. So my routine basically is that I will, start at night with looking through the charts, and I work up the charts very carefully each night, starting with the weekly chart, then going down to the daily, then looking at intraday, higher time frame intraday charts, and then finally the tick charts that I use to trade off of during the trading day. And I'm looking for key levels of support and resistance. I'm looking at how the market traded. For example, today it traded down. It traded down yesterday, and it did so both days on increased volume. So my anticipation for tomorrow's trading is that we are likely to see some additional downside movement, at least in the early part of the U.S. session tomorrow. Probably coming in to test the recent lows around 1596 or so, whatever that level is. Yeah, 1596 and a half. Probably come down to test those. So I'll watch that area. So I know that, any rally up tomorrow morning in the early part of the session would be a good opportunity to look for a short trade if it sets up well. And then when we're down around 1596 area, maybe a little bit below that, to see if the market starts to peter out, if it gets down there, to start to see if the selling starts to peter out and buying comes in. So then I would look for that area to be long. And that's basically what I do. So at night, I'm setting that up for myself. And then I usually come into the market early. We open here in the U.S. at 9:30, but there's activity from about 7 o'clock in the morning, Eastern time this is, on. And sometimes the activity is even earlier than that. We'll see it in the London session, we'll see some, and sometimes even in the Asian session. I'm not trading all night long. I don't try to do that. I need my beauty sleep.
Sure.
Otherwise, I can make mistakes too easily when I get tired. So I'll look for I'll reassess the market when I come in the morning into my trading desk, and then I'm looking for opportunities. And the S&Ps are a market that a little bit more unique than other markets. There's certain inflection points, like around 8:30 in the morning my time, around 10 o'clock in the morning my time, noon time. I mean, these are all times when it's not unusual to see the market to reverse or die out at that point if it's running.
Are you in the Eastern Standard Time Zone?
Okay. Yeah, New York time zone. That's right.
You mentioned that you had some charts that we could take a look at. Could you pull them in now, or?
Sure, I can give you a sense of what I do.
I see that you got some channels on there.
Yeah. So this is the S&Ps. This is the continuation chart of the futures, and I have the daily on your right, and then the weekly on the left. But even before we go to that, let's just take a quick look at the higher time frame, and I'll go to the cash market for this. It's easier to see. But here's the monthly chart, and it's just price bars here. And we have over here the 2000 high, right, that we made back in the big bubble here, leading up into and that's when I started to really get into the market, thinking that this thing was going to go to the moon. Obviously wrong, right? And then in 2007, we saw this high come in, okay? And we've been basically trading in a range, in a big, gigantic trading range here on the monthly for 13 years, and we just broke out of it. Okay, we just broke out of it. So I'm thinking that the odds are good that the market's going to come back in and test this high level here, somewhere around here, maybe go a little bit below, maybe hold a little bit more, but come into this area in the next couple of months or so, and we'll see what happens then when it gets down here. But that's on my mind. If that occurs and we don't see a lot of supply coming in and we are able to hold this level, then I'm inclined then to try to play for a a longer term position chart, either in the S&Ps itself, or maybe I might go to SPY, or even some stocks, and see if we can't get a push up above this 1700 level in the cash market. But in general, this is looking bullish to me, because we've just broken out, and now we want to see how it comes back in and test. This is a big part of the puzzle in Wyckoff analysis, is testing of previous breakout areas.
So you're expecting, like you mentioned, you're expecting that resistance level going back 13 years to be tested, and the bullish, or correct me if I'm misunderstanding here, the bullish take would be, that, you see the market come in, you see buying coming in on strong volume, that would sort of confirm that the breakout is real and we may be heading, much higher.
That's right.
Now, if suppose, you fall through and you don't see the kind of strength you're looking for, would you then expect a big move down to almost 700, where we're back in the range and we're going to test the bottom of the range again, or?
We certainly could do that. I don't try to make predictions about what would happen, but how I would handle that would be to say, okay, if we come back down here like this, and we see supply come in, and it would have to come in, we would see the spreads of the bars widen, okay, and the closes primarily being on the lows here. If we started to see that, then I would look for a weak rally back up to test this level again, okay? Because this would be called in Wyckoff terminology, this would be called an up thrust. And then typically, especially on this kind of a time frame, we are very likely to get a test of that up thrust, and that would occur back up. It would be just the opposite of what I anticipate it's going to do now, is that we'd come down and then come back up to this level and test to make sure there are no more buyers here, because the sellers don't, if that's what the market's going to do, it doesn't want to have buyers come in on the way down, because then they have to push through those buyers if they're trying to sell. So then I would anticipate that it would come down. And then where would the levels be? Well, I'd be watching this level, and I certainly would be watching this level, this area in here. And it depends on how we came down to this. If we start coming down similar to the way we did back in 2008, 2007, 2008, that's in here. Look at these wide, we say the ranges or spread. Sometimes we refer to it as spread. I guess it's the English version of it. But if we start seeing that kind of wide spread, or those wide ranges down, closing poorly, we could knife down through this. But that's not the scenario I see. The scenario I see is one where we come back on narrow spreads, not wide spreads, but narrow spreads in here, test this, see some buying come in, sort of like what we see here. We see a nice, we came down to this low here, and this is known as a spring, sort of the reverse of an upthrust in Wyckoff terminology. But we see buying come in here, and it gets aggressive, and then we lift off nicely. And if this is slightly different, we're not springing here, but we're coming back into what had been resistance in 2000 and 2007. And now we're looking to see if it will occur as support. And if it does, then I would expect this to take off to the upside.
Now, you mentioned that in your own trading, you're an active day trader, in and out of the market in the same session. Obviously, like we just went through, you do have a longer term analysis that you're sort of is maybe in the back of your mind. Are you of the belief that one type of trading is easier than the other? Do you find short term trading, like some people view trading like the weather, where it's easier to forecast the weather tomorrow than 10 years from now? Other people compare it to aging, where you're going to have more gray hairs 10 years from now. You might not know where the next one exactly is going to be. Do you have a take on that as to whether short term is easier than long term, or or a philosophy there?
I think it probably depends on the individual and what they focus on. For me, trying to anticipate the longer term moves is a little more difficult than the intraday moves. Um, it's fairly easy, not to say that I'm perfect at this. I still make a lot of mistakes and have errors, but it's easier for me to see the intraday moves than it is to be able to tell you what's going to happen next week or the week at 2 months from now in the market. I couldn't tell you what we're going to see 2 months from now. I think we're going to see in the next couple of months that we're going to come down and test this level. That's what I'm anticipating. But I'm not really good at the longer term stuff. I'm much better at the shorter term stuff.
Sure. Now, you mentioned that you've got a degree in clinical psychology. Obviously, there's a huge psychological component. Losing money is something that almost every trader, or basically every trader, does have to go through at some point. Even the ones that are successful, like you mentioned, you have a win rate of 75-80%. Of course, you still have to be able to manage those losses that do come up so they don't destroy your account. What is and I know on your website, you talk about deep practice. What is sort of, I guess, some insight you could share regarding the psychological approach? Is there anything you do to sort of, keep yourself psychologically in shape if you have a couple losers in a row? Is there anything you do to sort of balance yourself, or how do you deal with the painful psychology of losing?
Yeah, it's a good question, Simon. Very good question. Psychology is, in my judgment, and granted, I'm a psychologist too, so I'm a little biased in this. But I think the mental side of the game is really, really important to anybody who's trying to trade at any level, really. And I started off as a clinical psychologist, and the deeper I got into trading, the more I wanted to know about the mental side of the game. And I was fortunate at Rutgers, there was and there still is, a professor there who's also a very well-respected sport psychologist. And he's the sports psychologist to several Major League Baseball and National basketball teams. He's the sports psychologist for one out in the Midwest. And we kind of pestered him when I was first there to do something on sports psychology, and he didn't do it. But then a couple of years after I graduated, he did start a year-long course. So I actually went, even though I had my doctorate, I went back to learn sports psychology from him, and I spent a year with him, studying under him to learn that. And there's certainly it's different certainly than clinical. Clinical is dealing with people who have true mental illnesses like depression or schizophrenia or anxiety disorders. And a lot of people will come to me and say, oh, I think I've got an anxiety disorder. I'm very afraid. I can't even, pull the trigger in the market. And it's not 9 times out of 10, it's not a mental disorder that is capturing or hijacking really my clients' minds. It's the nature of trading, and typically people will get into this business because it's so easy all you've got to do is put a few thousand or maybe even less these days up in an account for margin if you're going to trade futures. And they'll give you free access to the platforms and the data feeds, or it's minimal expense, and you can, there's no structure here, right?
Sure.
The market's pretty much 24 hours these days. You can buy, sell, or stand aside for any amount that's within the confines of your account at any point in time that you want to do that. Very different than a corporate kind of employment where you're expected to show up at a certain time and stay at the office throughout the day until quitting time, and you're also expected to meet deadlines for your projects or whatever it is that you're doing. You've got to produce things, right? Trading is very different and lots of times you'll sit there and you feel like you're not being very productive. I mean, that's a bit of stress in and of itself. So what happens with a lot of people is they get into this without having the requisite skills to, just as I did, for several years, trying to figure out how to make this work. How do you do this? And not having the skills and yet trading anyway. And it's the very first thing I say to people: stop trading. Just stop, and get on a simulator. And then people will say, oh, but Dr. Gary, if the trade doesn't have money behind it, it's not a trade. And frankly, I say that's BS, because if you don't have the mental ability to say to yourself, okay, I'm going to get a little bit disciplined here and just focus on simulation and learning how to read the market or my indicators or whatever method you're using. If I'm not willing to do that at that level, man, you're never going to learn how to trade. You don't have the real desire or the real ability to do that. Now, it may sound harsh, and you probably won't hear many psychologists say stuff like that, but this is a tough game, and you really do, first and foremost, need to have an edge. If you don't have an edge, all the good psychology in the world is not going to help you. That being said, I understand what all the good psychology in the world is, or I think I do. I think I understand much of it, at least. I spend a lot of time with the literature and keeping up with the things that are current and what some of the new technologies in psychology for helping people kind of tone down their stress and their anxiety and improve attention and all of that, as well as some of the behavioral finance material that actually was started by two psychologists, Dan Kahneman and Amos Tversky, back in the late 1970s, when they talked about loss aversion and the cognitive heuristics and the biases, the representativeness heuristic and the framing effects and things that we latch on to, which have nothing to do with what the market is doing. To give you a quick example of, say, the representative heuristic, the chart represents itself as maybe having a good trade, and so you take that trade, but it doesn't work out, and you're kind of left thinking, why is that? And that's most likely a cognitive bias that's occurring, something we call representativeness, which for example, a good example is one of the Japanese candlestick patterns. For example, a bullish engulfing pattern. Many people will go long on that, and many people will get stopped out, wondering, and then they'll wonder why. Well, yes, the bullish engulfing pattern was definitely there. That's black and white, but what they didn't really do was a thorough analysis, and they didn't look at the background conditions and the overall structure, for example, of the market. And without looking at that, this little piece, your mind gets captured by this little bullish engulfing pattern, may or that's really not an edge. It's not a good edge. So anyway. I told you I can make long stories out of things. Really understanding whatever it is you're doing, and there's hundreds and probably thousands of ways to trade the market, and you pick the one that works for you. And the Wyckoff method happens to work for me. It may not work for everybody. There are other methods that are probably just as good. Whatever works for you is what you want to focus on, and then you want to become an expert in it as best you can. So that's number one. And the second thing that I would say, just briefly, is that mindfulness, which comes out of the yogic and the Buddhist traditions of the East, it's changing the landscape of psychology here in the West in a very big way. And the more we learn about it, whether it is through the psychological effects on how mindfulness helps you with anxiety, with attention, with fear and other strong emotions. Or we look at it in terms of neuroimaging, where the neuroscientists are looking and doing brain scans of people who are in a mindful state. There's just an enormous, how do I say it? Just an enormous movement towards this. And we're finding out more and more how valuable and how helpful this can be. So if there's one thing to learn on the mental side, it's to begin to learn mindfulness meditation or mindfulness and begin to practice that, especially if you're having difficulties with stress and fear and you're jumping or impulsivity, jumping in and out of the markets, that sort of thing. Mindfulness will be a very, very helpful tool for you.
Your website is tradingpsychologyedge.com. You have a number of services there for traders. Could you tell a little bit more? Tell us a little more about your website and what traders can get from there, as well as what you're offering.
Sure, I do a lot of a couple of things. You can look at some of the tutorials that we have, video tutorials on Wyckoff chart reading. There are several here. Probably the flagship is what we call Chart Reading Mastery. I do this usually twice a year. I haven't done it yet this year because of the book that I'm working on is taking up so much time. But that's an 8-week course that I spend a couple of hours each week on taking you through all the fundamentals of the Wyckoff method and how to really read the markets or read the charts by their own actions using the price bars and volume. We have a couple of indicators and trade setups, tutorials, for example, the spring and the upthrust. I spend a couple of hours on each of those trades, just talking about springs for a couple of hours. All the nuances, everything I know about that, I detail. I don't keep back secrets. It's not about that. For people who like to use indicators, one that I find, it's very simple, but it's very useful. It's the 310 Momentum Oscillator. And then the Weiss Wave plugin. We use this every day when I'm trading the markets. It's a very, very valuable tool that was really created by Richard Wyckoff originally in some of his early work, but it's been modernized and kind of conceptualized in a much better way by David Weiss, and we use that. So those are some tutorials that people can do. I also every week on Thursday evening, and it's recorded, so if it's a problem for you to make the actual session, then you can listen in afterwards. I've got a number of people who do that. But I meet with a group of traders, and there's always room for. And we have people who are ranked novices all the way up to fund managers, probably people you would know if I told you the names, but certainly fund managers who run large funds in this. And basically we go through and it's called deep practice for a reason. I apply the psychological principles of mastery and developing expertise into this weekly session that runs about an hour and a half, and we just do we go through charts and kind of create a game plan for the next trading day, and then go through on an intraday chart and go through it bar by bar and trade it, sometimes making good trades, sometimes not making good trades and getting stopped out. But we always go back and say, why did that happen? What can we learn from this that we can use the next time? And there's also a bunch of things on the psychological side. I talked about mindfulness. There's a tutorial on that. If fear is a big issue for you, there's a good tutorial on overcoming fear. And using a trading journal, which I think is very important. Having a trading plan. It amazes me that people will say, oh yeah, you got to have a trading plan. And I say, do you have a trading plan? They say, nope, I don't. So many who don't. But there's also a bunch of free resources here. Some of them are videos, others are articles, and that's the first place to start, is here. And also, I can't quite do it as much. I'm really working hard on this book, and I'm behind, so there's stress for me. That's what gives me stress. I wish I could just trade. But I'll put up blog posts, usually more often than I am doing now. But there's a wealth of information here about what the current market's been doing, and you can see here's the stock market's reacting. Here were a couple of day trades, and I kind of detail those out. There was, looking here just quickly, there was a nice article that I did. You can see it just go down a little bit, scroll down a little bit on my blog. I did this for the Indian Technical Analysis Association. They have a publication called ATMA Spear, and they invited me to write an article, and I did, and it's a very detailed article on how to use multiple time frames with the Wyckoff method for both swing and day trading. So if you are intrigued with any of this and are interested in the kind of work I do, there's a good spot to start, and it's free. You get the link right there, and you can go and read that.
I think that's about it for the questions I had. Dr. Dayton, thanks a lot for joining us. His website is tradingpsychologyedge.com. Thank you very much.
Thanks for having me, Sumit. I really appreciate it.